But let's quickly give you a quick review of yesterday's stock market. The banking sector took a major slap yesterday. The index was down 4.5% on the day that the central bank decided to punish 12 banks in the country for failure to meet September 30 deadline for a new minimum 60% loan-to-deposit ratio that has since been upgraded by the financial regulators to 65% and a new deadline set for the 31st of December. But you heard from Bismarck Rwani earlier in the program at the start of the show, this 499.175 billion naira will not be going out of those banks. They will be sterilized money, which is taken by the central bank into their cash reserve ratio until they meet the deadline. So no one should panic. There should be no panic withdrawal. This is just a normal regulatory sanction or discipline, if you want to put it that way, for these 12 banks that are listed, and their names are already out there in the media this morning. Everyone is reading about it. There's no need to panic. This regulatory discipline, these banks are not losing a dime. All they need to do is to walk the way backward and meet the new regulatory requirement of 65% of their loans to deposit. They need to grow more loans out of their deposit, generate more deposit, give out more loans. That's what the Central Bank of Nigeria want to achieve. So the new deadline for December 31st, 2019 is a new day set. The regulator said it says it's an appreciable level of growth that they have seen in the banking system in terms of loan growth up to the end of September, 5.33%, about 16 trillion naira in the banking sector. That's one story there. But if you look at the stock market, the story is still about the market down. Of course, the global markets took a dive yesterday. The Dow Industrials on the New York Stock Exchange was down nearly 1,000 points yesterday, about 900 points, and that was a major story for those who think that the global market have a way to go. We'll have this more conversation. What does it all mean? The U.S. New jobs data came in yesterday much lower than expected, 132,000 against 135,000 against 152,000 expectations. So from economists, that was one story that spooked the global markets yesterday. But let's have a chat on this and what this means for the world markets today. Let's talk to Uchenna Minis. Uchenna is a chief markets analyst with Eagle Global Markets and is live to us also here from the trading floor of the Nigerian Stock Exchange. Uche, it's good to see you. Good morning. Welcome to the show.
Thank you for having me, boss, and thank you for having me.
Yes, thank you, Uche. I'm sure yesterday is a little bit of a nail-biting for us here in Nigeria. We went on a holiday. On Tuesday, we came back on Wednesday, and the market we were bleeding all over on the equity side, globally speaking. Even crude oil took a bit of a beating yesterday. What does it all show or tell you, Uchenna, about the trade war? What the U.S. ADP numbers report yesterday says the issues in Germany as far as the economic recession outlook is concerned, and of course the dragon and the Far East talking about China.
So now we are now looking at macro data coming up as significant in terms of coming to the front burner now. Now, trade wars has been put out at the second seat, and we can see the ISM manufacturing data in terms of manufacturing and services slowed down significantly in the U.S. Now, the narrative and the rhetoric has always been that the U.S. has been strong in terms of its economic strength. However, this data is coming to show significantly slowing down in this space, and that's why we can see risky asset losing significant value in that space.
Do you think the market is a little bit not too sure about what will happen with the next round of trade talks between the U.S. and the China representatives sometime in the next couple of days, in about a week or so from now? Do you think the markets are not too sure about what will happen, or perhaps they're trying to add a bit of uncertainty around this trade talk with the Brexit endgame that is playing out in the UK? Do you think the market is generally uncertain about the immediate future, as it were?
Just before a week ago, it was quite clear that China and US might meet get to that place of truce, probably get a trade deal signed off. But now it's looking kind of bleak. When you consider the impeachment inquiry that's been passed to President Trump, it's a win-win situation for President Xi to just wait to confirm if the President Trump would retain his seat for the coming 2020 election. And that in itself can change the rhetoric and the narrative concerning the expected trade war negotiation. So that way, the market is sort of adjusting to being defensive, given that risk of uncertainty, as you earlier mentioned.
So, in a manner of speaking, Uche, this is a very interesting conversation. The trading week is getting underway, but again, we're second to this last final day. Thank you so much. Uche Namin is from Eagle Global Markets.